Good evening, everybody. Hope everybody's having a nice, I don't know what it is out there. It's not cold. We had 80 degrees here the other day in Pittsburgh in February. Unheard of. Now it's back down in the 40s. All right. Yes, Texas weather. That was one of the reasons I moved back out of Texas. It was so hot down there. Okay. So before we start, just put a reminder today, everybody in the chat room, that on the 18th and 19th will be our full session, 2-day training on candlesticks. So if you're somebody new to the candlestick area, that's the bread and butter type training you want to go through. I tell people it's everything that you've already seen, probably in bits and pieces, but once you see it in a chronological order, it all starts fitting together a lot better. So after that, when you see sessions like this, it's not where you're having to kind of try to learn things and remember things. It's more where it is more of a reinforcement of what you already own, or what you already know. So as we can see, 12 days in a row of new all-time highs. And so obviously you've got everybody out there saying, now we're ready, we're going to see a correction. Correction's viable, but as you can see what happens almost on a daily basis, make this big enough where we can see it. You get the selling during the day, bring it back up. Open lower, bring it back up. Trade down, bring it back up. So the profit taking is occurring during the uptrend. Now, I kind of put a little bit of a political slant to why this trend is so slow and solid is because normally a market, the Dow hitting all-time highs would be the big splash in the headlines every night. But I think because of the political ramifications, that this is considered the Trump rally, that the media probably isn't given as much hoopla as they normally would, which, whether that's the case or not, at least what's happening right now is you don't have a lot of, we'll say, publicity that the markets are moving higher. What you're seeing is just kind of a steady uptrend in the market that nobody is really reporting on. So that means there's not a whole lot of hype going on to get everybody piled in. However, the normal situation is, where do most people buy? They start buying exuberantly at the top, and that's usually because there is enough information out there telling people things are getting better. And once they all realize it, then they start piling in, and that's when you start looking for your profit taking or your reversal. Kind of the same scenario here on the NASDAQ. The one element that we can see through this whole uptrend is they've never been able to close it below the T line. You have days where they start selling it off and they bring it up. This right here was even a close situation in the J-hook pattern, where when they were trading it lower below the T line, they could never close it below the T line. So that's why the T line is a very important factor, especially when a trend is in progress. And the transportation index, big piercing signal on Friday, bullish confirmation today. And if we make this smaller, you can see what the trajectory is of the human nature of this trend. Got a big rounding bottom, and what's the one thing they haven't been able to do? close it below the T-line. Well, they closed it here, but brought it right back up. So this is more of an explanation to say investor sentiment hasn't changed. That's not to say there might be a major whiplash because of something, but something. Would high PR change the trend? PR meaning news. Yeah, I think once the, because right now, they were even reporting today, I forget which commentator was saying that if you read the New York Times, you wouldn't know that the market was doing anything right now. So once that gets past where the news has to be brought out that the markets are hitting all-time highs, the more that becomes publicized and the more everybody starts jumping in, that's when you start looking for profit taking. All right, taking a look at some of the commodities. Here's a question that is always brought up. That notice how gold is still trending higher, but notice what happened in the gold stocks today. They just got slammed. That's Gold Rand. That's AU. Notice they were getting killed. AG sold off. So there's always the rhetorical question that if gold is still trading higher in this uptrend, why are they selling off the gold stocks? And the answer is it doesn't matter. We may not be able to figure out why that's happening, but somebody out there is selling off the gold stocks for some reason. Probably because people that are much closer to the industry or analyze the industry see something or know something's happening out there that's not built into the gold prices at this time. Yes, no different than when oil may be up and gold, or the oil stocks are down. Gold stocks are not gold, they're still equities. Yep, they usually have a characteristic like anything else that the underlying commodities kind of supports or diminishes the price of the gold. But as we can see, the gold stocks have been getting hit pretty hard over the last week, yet gold itself is not really changing its up. There are times when the stocks lead the metal or the commodity, and vice versa. A lot of times the commodity will lead the gold stocks because, remember, prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. So we can see what's happening right now in crude oil. So this is why we want to be able to analyze what happens on specific charts. Which way is crude oil prices going right now? Well, the rhetorical question is, you can't tell which way it's going. So pretty there, Jason, you got it right. It's moving sideways. So if it's just moving sideways, what's that tell you that the investor sentiment is in the underlying stocks? That there probably really isn't any great force going one way or the other. So if we can analyze something where there's no great force going one way or the other, that tells us we probably shouldn't be very heavy in those shouldn't be very heavy into those stocks. We should be someplace else. Will that mean a more dramatic change in gold stocks when they turn up? Not necessarily. And the other scenario could be, all right, they've had a strong move. here's your typical chart. Where do most people sell? Panic sell at the bottom. Then what do you start looking for? Your buy signals. Where do most people buy? They buy exuberantly at the top. What do we see? A bearish Harami sell signal. So analyzing this chart, we don't have any observable or any obvious reason why they're selling the gold stocks off. So all we can do is analyze the fact that they are. That's all we need to know. And this is where we can see how far they're going to sell it. Back to the 50. Fibonacci retracement levels. This level, this level, this level. We have no idea. Nice thing we've got as far as, what analyze candlestick signals is, if it hits here and bounces up, we know that's where the retracement was. If it hits the 50, that's where the retracement. Here, at least we have targets to see what type of signals happens at those levels. WRT gold are both gold and gold mining stocks similar affected. WRT, is that a symbol? No. Okay, as far as Pete trading buying September, all options, SBR Gold Trust with a vengeance. You know gold. We've seen activity. It started back in December. Then we have some more at the very beginning of February. They're buying out till April. Now, they're going all the way out to September. All right. Yep. So now, why do prices move? We, as individuals sitting in our homes, unless we've got massive access to different research sources, we don't know. All we can do is see when things are being bought or being sold. Here's coffee. You can pretty much see what happened in this downtrend. Came up, failed, back below the 50. Stochastics turning down. There's the next target. Or there's your next magnitude of move to the downside. That was coffee. Cocoa. You can see the trend. You can see they kind of hit the top of the trend. Now what do you have? You've got the potential of a bearish doji sandwich. If it opens lower tomorrow, where's your next likely target? Right down at the bottom, so you know at least you'd be trading in the right direction based upon what type of signal you see right here at the T-line. A bearish doji sandwich would take us down further. So whenever you see a situation, again, like crude oil, you can look at this chart. This is the dollar, and say, which way is the dollar going? Well, if you can sit here and say, well, I have no earthly idea, that means shouldn't be trading the dollar. There's going to be too many chart setups that look like this or look like this to tell you which way to be going. So if you look at a chart that has an obvious support level, like we're seeing in soybeans right now, and we're seeing indecision down here, that gives you at least a little bit better alert that you're getting in the oversold area. You're starting to see indecision right smack dab on the 200. That gives you a higher probability of getting into the right trade at the right time. So again, everything we look for as far as our probabilities is where are things happening. In this case, in a specific commodity, where you might not have anything else to correlate it to. For example, wheat right now doesn't tell you too much other than it might be supporting on the 50, but there's nothing to tell you that it is, versus trading stocks where if we can still see that we are probably in an uptrend, and we can look at a ETF. What did Labu tell us today? That they were bringing this back up as a J-hook. If there's a 45-degree off of this big price move, that means the biotechs are good buys right now. That was, we had a good indication on our recommendation today on CLSD. We had a kicker type signal, a little scoop type pattern that is open positive. This kicker signal is still in effect, and the 50-day moving average may not be acting as resistance. So we were buying this one today for two reasons. One, because of the kicker signal, breakout through the 50, and two, we can see where our likely target might be. Up here at, let's say, the 10.5, that's about $2.50 on an $8 stock. That's somewhere around a 35% upside potential. And it's got more potential, eventually coming up into this level, to where you could almost be making 250%. Yes, on Tuesday afternoon, when do they announce it? Wednesday after the close? That becomes my fine-tuned analysis. What are they doing right in going into going right into earnings? And if it looks a little bit weak, the worst case scenario is you take some off, take some profits, and then wait to see what they do after the earnings. So again, if we see that there is that much emphasis coming back into the biotechs, we could see EZPM bounced off the 50, up, came back down, up, came back to the 50, telling us they weren't coming back down here, and then breaking out through the upside. That tells us we probably have a new dynamic in that stock. Lots of the biotechs, and the reason I'm showing a lot of the biotechs is this one broke out. How? With your best friend signal. Now what is it doing? A J-hook pattern telling me wave 1, wave 3. So these are all situations where if we know that the market isn't selling off, we know the biotech sector is showing a lot of good charts. That is ACOR. There's another big Morningstar signal off the 50, and we're ready to break out. This is ONCE, PGNX. So I'm showing a whole list here that you can look at these. So if I'm looking at the biotechs, and I see there's still strong buying going in, especially a lot of these bouncing up off the T-line or the 50, I can calculate what my upside is based upon the fact that the Labu is telling me there's lots of buying coming into this sector. OCUL pulled back, right smack dab to the 50, Morningstar signal. This this puts us in a situation where if it opens positive tomorrow, it's confirming our Morningstar signal, telling us they're staying above the T-line and giving us a possible wave 1, wave 3 setup. So again, I'd rather be buying off the signals and patterns like a J-hook pattern, NLNK, because I know if this was a 5.5 point move, this is a 5.5 point move, takes me up into the $20 range. I can kind of calculate how well or how much upside me having money at risk will be able to produce. There's our bobble breakout. Broke out through this downtrending channel. Tells me there could be a good run to this one. That's AIMT. NOVN. starting back up. And what makes this one interesting is if it gets moving again and gets breaking out up here, it's got a lot of space where there's no resistance. It's got the capabilities of tripling back up into the T-line area. I'm sorry, the 50-day moving average area. And AVXL, J-hook pattern, classic fry pan bottom breakout. We could see when the selling started, long-legged doji, bearish confirmation, doji, bullish confirmation. You can be buying this one with the expectation of that type of move. All right, yes, we'll have to find out whether CLSD is reporting on what is Wednesday or the next week. All right, so probably things that you're going to see recommended, things like Kara. There's your classic fry pan bottom J-hook pattern. What's the upside potential? This is about 7 points. That could take you up into about the $22 area. So the advantage, again, we have is we can see, based upon the patterns, which ones are still acting well and what's one of the criteria for continuing the uptrend. They can't seem to close below the T-line. This is SPPI. This is now TEL. Staying long on this one. XNCR. I think this is another biotech, little scoop type bobble breakout. If it opens positive tomorrow, what's it telling us? It's confirming our big Morningstar signal and telling us that this level is not acting as resistance. INSY. If you're more aggressive, what's this setting up? Kind of your bobble pattern. So if it opens positive tomorrow, you can be buying with the risk that it could get back up to the 200 and fail, but anticipating that this is a bobble pattern getting ready for a breakout, which tells us wave 1 and wave 3 will be approximately the same. So we've got a visual playing field or a visual grid that we can analyze. Where is our buying points? Here's on CTRL. We can see what's happened. Big gap up, change of investor sentiment, profit taking over. Be a buyer right up here at the $16 level, telling you that that there's now a new change of or a new investor sentiment in this trend. FGP, Morningstar signal up through the T-line. Where's the first target? Right here. OLED, kicker signal. Kind of a big fry pan bottom, and where did they break it out? Right where that fry pan bottom started. Kicker to the upside. Lots more upside. And here is one that somebody pointed out today. Notice the scoop type pattern. Notice the J-hook type pattern. Probably still more upside. Wave 1 going into wave 3. So when we can recognize the patterns, it just gives us a much higher probability that we're in the right place at the right time, 1, and 2, that our magnitude of profits, the profitability, is going to be much greater than just an uptrending stock. So look at our big bullish engulfing signal that occurred right here on the 50. And what did it do to this sideways trend? Reversed it. That was the signal that told us we wanted to start buying. If it opens positive tomorrow, what's it telling us? That this level is not acting as resistance anymore. So again, we have the visual confirmation of things that are going to or that have a change of investor sentiment that produces much higher probabilities. J-hook pattern, where's your next target? Probably up here at the top of this trend. The top of this trend would probably equate to this wave right here. So you have a potential target based upon the top of this trading range and a J-hook pattern that if wave 1 and wave 3 are the same, kind of equate to hitting to the same spot. Genco Solar, there's your bobble breakout. There's your scoop pattern. Buy more upside. I don't know what MB. Mind Body. There's your fry pan bottom. You're right at the breakout level. Where's your next target? Probably somewhere up in this range. And on the short side, obviously, the selling in the golds is pretty hard. The candlestick's still heading down. This is why anytime you see things trading back below the T-line, you wait until you see a buy signal and a close above the T-line. Because if anything, notice how the gold stock started up early this morning, but came back down and got crunched. That occurred in quite a few of the gold stocks where they were trading positive and then got slammed. So anytime you see situations where you're below the T-line, you start seeing buying, you still want to wait to see if they're going to close back up above the T-line. Same scenario in the opposite direction. Whoops. Dang. SBLK doesn't show up on this chart, but it sold off earlier in the day, in the morning, and then came back up above the T-line. So you still want to see what happens in a trend at the end of the day. DWCH. You can see what's happened here, bearish doji sandwich. First thing you do is you draw a parallel line up through here. I think I can do that. Trend channel. Up here. So this is the first target I'm kind of watching. So if I start shorting this tomorrow, I watch diligently here. Now we have a evening star signal. We have a bearish doji sandwich. So this would be the opposite of a McMuffin because you got an evening star signal, bearish doji sandwich, or an evening sandwich. I don't even know what to call that. But it should have some force more to the downside, maybe all the way back down to the moving averages. Shop, bearish doji sandwich after a dark cloud type or a bearish engulfing signal. Another one that could possibly come back down to this level. Late night sliders, right? And OU hasn't really gotten started, but you can see the trajectory. Let me see what the total trajectory is here. You can see what your trend is. Obviously down. There's your parallel lines. So what's your potential target? Back down here, taking you almost down to the $13 area. So 6.5 points to the downside on a 1950 stock. That would still be a good hefty 50%, 40% potential return. And XPER, this is just to kind of give you that clarity that the bigger the signal, the more compelling they're going to be slamming it to the downside. AMN, we're still holding on to because it's got the potential of a J-hook pattern coming out of the fry pan bottom. was at a fry pan bottom in November on UA. In November. Yeah, it wasn't a clear fry pan bottom, but it had that same illusion or same illustration. Usually a fry pan bottom is much more stable, kind of more trading like this where it doesn't really do too much. This was more too active, that it was breakout, consolidation, back up to the resistance level, and then selling. What were the other ones that we were? A couple other shorts. Let me grab them here. Let's see. Also, we had recommended PLUM the other day. Another example of why you wait to see what it does by the end of the day. You can see what happened today. You had the buy signal. It opened positive. It traded did a doji. Opened flat and traded down, which would not be good by the end of the day. Then came back up. So there's our morning stars, or our morning sandwich. Morning star signal followed by a doji sandwich, J-hook type setup coming out of a big fry pan bottom. What was Kiwi? Kiwi is a good example, yes, of when you see the sell signal. What was the indicator? The hanging man. The next day they started selling it off. That's where you should have started taking profits, or it needed to open positive and trade positive to stay in it. Logical place to put your stop was right here. So that signal right there, this is why we want to study candlesticks, is that once you see the sell signal, take your profits. And what was our other ones? I forgot. Did I do AMD? Yeah, I did AMD. Oh, so we got a lot that aren't doing anything wildly exciting, but they're staying above the T-line. FTK. Here's another Biotech Morningstar signal. So if you closed it out here, notice where it's obviously back up. I did AMD. Let's see. AMD, same scenario. As long as it stays above the T-line, your uptrend's in progress. So there was a few more like that. Oh, AAOI. I wrote these down. Where did they go? Oh, they're way over here. You can see the breakout. Where do we want to start watching for profit taking? When they start buying exuberantly at the top. So you still be fairly protective. Right now, we'd move our stop up to today's open. It shouldn't come back down through that level. KEM, same scenario. Did some consolidation, doji. If it opens lower, probably want to take off half the position. Definitely have your stop right here. So you already have calculated when you should have been buying, when you should be selling. And EXAS, another one that I wouldn't be afraid to be buying tomorrow, because you've got the left-right combo right off the T-line after you broke out. That told you there's more upside. Anyways, identifying the signals at least puts you in a much more confident situation where you know exactly what's happening right here. They're buying off the T-line with a left-right combo. We know what should be the results after a left-right combo, more upside. If there's more upside to this, tells us we've got kind of a J-hook pattern. So, all right, with that, are there any general questions on candlesticks? What is your position of the rising and falling methods pattern? They're good, but you don't see them very often. Yeah, three methods rising. It's a good pattern. Now, what I tell people is when we do our training, we concentrate on the 12 major signals. The reason for that is probably 99, I should say it more like this. Probably 100% of the time, the 12 major signals are going to be something that you want to know not only visually what they look like, but what the Japanese rice traders described them as what type of investor sentiment they were created from. That combination of being able to visually see when a reversal is happening because of the signal and knowing what that signal illustrates, that gives you an extremely powerful insight into what makes prices move, somewhat the same as somebody that's probably been trading for 50 years. So you don't have to have a lot of experience to know or be able to identify a left-right combo, what to expect afterwards. So that was a long answer. I forgot what the question was. The three methods rising is one of the 50 or 60 signals that you'll witness in candlestick analysis. However, when I say 100% of the time, you probably want to go with the 12 major signals, is if you see a method's rising, it might not be something that you go after as aggressively as if you see a best friend type signal. But what I tell people is instead of trying to memorize each of the 50 or 60 signals, you can either do it on our website or in one of the books. I go through about once every month, 6 weeks. I just kind of browse through and watch or refresh my memory of what type of signals occur out there other than the 12 major signals. Not that I want to put a full effort into remembering what they are, just so that if I happen to see one, I recognize it as being a signal, and I can say to myself, what is that? Is that three white soldiers? Is that three methods rising? Is that two dark crows? At least I know to go back and look in one of the reference lists to see what signal that is. How to catch the move like Labu did today? Is there any pattern today? No, there wasn't any pattern in Labu. So what you want to do with something out of like Labu was you knew that if you were short, that if it opened positive, you should cover your short position. Probably wouldn't be well up into this area that you start flipping to your 10-minute chart. Say, oops, they're buying. Would I be buying here? Yeah, there's nothing telling me not to be. Would I be buying here? Yeah, nothing telling me. Would I be buying here? No, looks like they're selling. How far are they selling? I don't know. When they came back over here, say, oops, I can see on my 10-minute chart, there's a J-hook pattern setting up. Will I be buying here? Could. Buying here. Does it mean when I'm buying here that they couldn't take it back like this? Definitely, but I can see what to do with my 10-minute chart, whether to be holding or getting ready to sell. When it's moving up like this and it consistently moves up, obviously it's making this candle bigger and bigger, and it's telling me, oops, there's a pattern setting up here. To catch it, no, there wasn't anything here to catch it. But what it did tell me was, all right, they're buying Labu. That means charts that looked a little bit doubtful. Yeah, I can still be buying those because they're buying the Biotechs. Let's see. Yeah, that's kind of one. Yeah, and the concept of a three methods rising is when you take it up big, they pull it back, it can't close back below this level. Pull it back, can't close below this level. So after 2 or 3, 4, 5 trading days, if the bears can't bring it back to this level, the bears give up and get out of the way and the bulls take over again. The weekend, it's at the 18th and 19th. It will be recorded. Your annual crawfish boil. All right. Yes, it is recorded. So, yeah, no worries there. So even if you can't sit the whole weekend, you're going to have to take the kids to, they still have soccer this time of year, for a couple hours. It'll all be recorded. You come back and look at it later. You don't close a position intraday, but wait for the signal at the close and not on the daily chart. Yes. Remember, the reason you were buying this in the first place was you had a morning star signal. Stochastics coming up. Stayed above the T line. When it traded lower today, where was it when you looked at it? It was already here. But the analysis is it's supposed to be in an uptrend. So if you close it here, what good does it do? You might as well wait to see what it does by the end of the day. If it stays here at the end of the day, then you close it. What's your opinion of covered calls? Tim, it all depends on what type of trading you're doing. If you can't figure out, that's not what I wanted to do. If you can figure out you're in a trend, probably don't want to do covered calls. If you find something, and I'm trying to find something that might not be moving very fast, but somewhere right in here where you can see it's not moving, maybe you do covered calls. But because candlesticks are much more efficient for telling you when a trend is in progress, you probably don't, unless you're trading something that's really lethargic, which you probably won't do you any good if you're trading candlesticks, you can do covered calls. Or if you've got something, let's say you own this stock for long term, and all of a sudden it gets up here, and you don't want to sell the stock because of tax ramifications or that you want to hold this longer term, and you start seeing it back off, then you sell some calls against it, because if you know it's backing off, at least you're profiting or maintaining some profits as it's going down. What do you do intraday when a big drop? Oh, let's see. We can't bring SBLK up, but what was the other one? No. Let's just say, for example, it was trading down here and you got nervous and you closed it out. Why were you buying it in the first place? Because you saw this signal, you saw it confirm. Then all of a sudden it starts coming back up. It comes back up through the open. All right, you buy it back. So you missed out on 26 cents. Probably weren't buying this to own to make 26 cents. We're buying this one because if it does this type of move, there's a 5-point move. So if you close it out and you see it going back in the direction that you expect it to, buy it back. That's part of that emotions thing, the ego thing. And I can say that with great confidence because there's been tons of times where I got panicked, sold out, and say, oh man, they're still buying this, and buy it back in. At the end of the day, I have to say, all right, I made a little bit of money, could have made a lot more if I hadn't sold it here and bought it back here, but at least I knew I was still in the right direction. John, yes. When we go through the 12 major signals and the patterns, usually the signals and the patterns, even though you've seen them, you've studied them, we're going to be walking through and talking through where they work, why they work, what the psychology was behind those. It usually takes us practically takes us a full morning just to get through the doji because we're analyzing everything that we're seeing on a candlestick buy signal. We start with the doji and you put all the parameters in there like the moving averages, the T line. So you're going to get a lot of detail. And I tell people, you're going to see a lot of repetition. But the repetition is that when you're done with this 2-day session, when you come back to a session like this, you'll be have much more clarity in your analysis of what's going on. And when we do sessions like this, it's going to be more reinforcing what you already know instead of you trying to memorize or learn something. Canadian trader, yes. There's two methods of trading. My method is trying to find the best charts out there, which we can do in a few minutes each day. Or if you're trading specific trading entities, you just watch to see what it does, and you might trade this on your 10-minute chart, day trading it. You can see what the nature of that stock is. If you like to trade Amazon, then you're trading each of the trading waves. The other way to do it is you scan each night and see which ones have the best chart patterns or the best short patterns. Maria, yes. The 2-day, this is JNUG. I think that it's coming back down to test this level. If you're new, it's a paid event. But like everything in our trainings on candlesticks is once you pay for that event, more than likely about 50% of the people in the training will be coming back for a refresher, which once you pay for that event, you can come back for free. How do you protect from an overnight gap down on an uptrend and a doji at the top? It will gap right through your stop. If it does, and you're back here in the morning, let's see, I'm trying to think of one. Oh, no, yeah, there's nothing you can do. Now, there'll be times where they gap it down. So if you see a doji in the overbought condition and you put a stop in the next day and they gap down through it, if you're there, obviously you close it right out. Yes, we show people how to scan. That's part of the process is usually Saturday. We go through the 12 major signals, the high profit patterns, again, explaining what they look like, where they work, what the psychology is that created them. We also go through the trend analysis, how you know whether your portfolio should be predominantly long or short or sideways based upon the trend of the market. Entry and exit strategies, how to keep out of bad trades even though they might have created a buy signal. Where you set your stop losses, where you take profits, how you use the gaps to your advantage for taking profits or getting into positions. Oh, I think there's 2 or 3 other topics, but the final one, and one of them is we go back through and we evaluate the signals and patterns quantified. Now, a lot of people ask, which ones are the best ones? Well, the 12 major signals are already kind of pretty well cultivated out of the 50 or 60 out there, so they all work well. Is there any that work better than others? Not necessarily. It all depends on what the market conditions are. This month, you might see hammer signals work very effectively. Next month, it might be the doji gap up. The kicker signal works well all the time. So all these details we're going to be going into. And again, you're going to sit there. You're not going to have to take notes. All you do is stay in your pajamas and drink your hot cocoa and watch because it's going to be more of a visual memory. Then if there's any weak spots, this is a place to ask questions in these type of trainings, number one. Number two, you get the recording afterwards so you can go back and go back through them. So it's well worth, it's the bread and butter of the learning candlesticks. It's well worth the money. You're going to get much more than your money's worth. Where do you get the symbols of stocks in Labu? Oh, I don't know. Let me see what this does. If I put in LABU, I can go up here and say change to sublist on this one. Then I could go down through and see which ones are in the sublist. Now I got the weakest ones here. Which ones were the strongest in Labu today? Which ones have nice patterns? There's a nice slow curve breakout on IMGN. NAVX, inverted hammer. So a lot of these, that's how you kind of sift through them. And we show that in the scanning process. Gap over stops likely to happen in DRYS yesterday. Oops. That over there. I guess they did another reverse split. Ooh, dang it. Yeah, right now, obviously. So you can see what the charts did. I mean, this was a time where you used your 10-minute chart. Now, this was probably prior to the pre-split. It went from 4 to 104 in 3 days or 4 days. And this is where it was much more beneficial to be using your 10-minute chart. I did find the list of stocks, but not the symbols. On most chart services, CE, if you have a list of stocks, usually they'll have the symbol right next to them. And or most chart services, if you've got, there's a box that you can hit, say, all right, I'm looking for Dow Chemical symbol, click on it, and it will bring up the symbol for you. Okay. All right. Jim, go ahead and do the double line. And in 4.1 seconds, do the next double line. Blue was moving up nicely today. Broke out of this area. You can still be buying this one with anticipation that once they broke out, they're still going to trade fairly strong. And ADHD, nothing here to get excited. Whoops, not there yet. This one, yeah, more now you can start looking to buy. Obviously, your first resistance level is going to be here at the 50. And ARWR, same scenario. Nice little slow curve breakout, and you're in this open area. The reason you have an open area is, or that you like to be in an open area, is because there's no resistance here. Remember, resistance is created by people that were selling the stock or buying the stock on the way down. When it comes back up, what's the normal psychology? Ah, man, if it gets back up to where I bought it, I'm going to close it out. So that becomes resistance. So you could be buying this one. Whoops, I did that just great. XIV. This one you don't buy yet until they can, if it opens positive tomorrow, your uptrend remains in progress. Micron, you could be buying this one. I'd be buying this one on positive trading, breaking this little downtrending channel. Obviously, it's supported at the 50. NVIDIA bounced back up, but this is what you have to be careful of. This is not a signal. Let me make this bigger. This was just buying in a downtrend. So you don't have a reversal signal. So watch diligently when it hits the first resistance level, which is the T-line. You see what it does there on the bounce. Fold, another one that you could be buying. You obviously watch to see what it does here at the 200, right here at this resistance, or that level. And PRTA, just stay long. Rounding bottom, kind of a belt hold, wiped out some sellers. They're not really able to close this below the T-line. Stay long on this one. Price line, slow, steady uptrend, but it needs to get back up above the T-line, giving you kind of a little scoop pattern. So if I was looking to go long, it wouldn't be until there was a close above the T line. TEL, scoop pattern. Could be, but not yet. It still has to get up above the T line. Yeah, you wanted to see it get more than halfway up this candle, which it didn't quite do, and it didn't get through the T line yet. You can watch it. It's still good to watch, but you need some more bullish confirmation. ONVO, big move to the upside. Look for a pop back up to the moving averages. PACB, slow curve. You can buy this one on positive trading. Your first target obviously is the top of the channel, but you can be buying this one. If you're buying this one on positive trading tomorrow, just make sure it stays above the T line. The 20-year note, still in this sideways mode. Wouldn't be trading the notes. So all I was telling you right now is interest rates are pretty much moving sideways. Jack's Pacific, gap up. You can buy this one also on positive trading tomorrow. That gap up told you there was a new dynamic, and now they're in this breakout area. Next target should be up here. And STOR, stay long. Not anything real wildly exciting until they can break through this level. But you do have the little bobble breakout, so you stay long on this one. Where do we row for the course? We'll have the link up here in the next couple of days, Alan. And you'll probably see it in one of the afternoon comments. AMD, all we're doing is staying long. Ever since the kicker signal, then your piercing signal gap up. There's kind of your methods rising, but this is more of an illustration to show that when they started pulling it back, look how indecisive the pullback was. And look how decisive the buying is. Now, INFN, inverted hammer, another one that can be bought aggressively on positive trading tomorrow, especially based upon the inverted hammer signal. TWI, nothing here yet until they can get it back up above the T line. Right now, I wouldn't be long or short this one. DVAX, looks like a little breakout. Let's make it bigger. Yeah, you can be buying this one. Do not let it close back below the halfway point of this candle, which would probably coincide with the T-line moving up. The reason you don't want to see it close back below the halfway point of this candle is because this is the candle that told you the bulls are taking control. If the bears can close it more than halfway down, the bears are still in control and you don't want to be in it. Salt, nothing of any great magnitude here. You can see you're in a slow uptrend, but if I was long, it has to open positive tomorrow. If it opens lower, you're still going to be stuck in this sideways trend. ACHN, nothing here yet either. Nothing. Just kind of a sideways chart. FBC, that's more enticing there. That's your J-hook pattern setting up. Brooks Automation. All you can do is stay long. At this point, with your stochastics getting a little bit soggy, your price movement getting soggy, it has to break out above this level. So I'd have my stop right here at today's low. If it comes back through there, the trajectory is gone. That's kind of what we were looking at today on this one. They did a big bullish engulfing signal on GKOS. Did a doji today. You still can be buying this one on positive trading tomorrow, a doji sandwich breakout. Wave 1, wave 2, going into wave 3. ENB, nothing. If you're short, you stay short. You would have had a hard time staying short when it came up through this level, but I wouldn't be going long on this one until you see a buy signal. And AGU, same scenario. If you're short, you stay short. But I would use today's, probably today's high as a stop. If it opens positive and starts trading positive, they're bouncing it back up, close out your short position. NVAX, this one you can get ready to buy. Inverted hammer right off the 50. You can be buying this one. SRPT, stay long. Nothing wrong with that one. BMRN, big bullish engulfing. Get ready to buy this one if it breaks out through this level. Good option trade setup. KTOS, nothing wildly exciting here. You do have a Morningstar signal. If you happen to stay long, you stay long. I wouldn't necessarily be a buyer of this one just because there's nothing real big bullish signal there other than a Morningstar signal telling you the uptrend is continuing. Ironwood, you can buy this one on positive trading tomorrow, J-hook pattern setup. And ZAIS, another one you can buy. It'd be more for the aggressive buyer because of the hopefully there's big volume on this one. If I was going to buy this tomorrow, it'd probably be above today's open, telling me they're still moving away from the T-line area. You mean big bag holders dumping? Big bag holders dumping. I don't know what that means, Roger. Nvidia. No, that's not a piercing signal. I think they call that an in-neck signal. That's where they open it lower, come up, but they don't close above the halfway point. So it's in neck. I think if it closed right where it opened, it would be at neck, and if it closed slightly below, I forget what the other is, but all they are is weak bounces in a downtrend. This one, nothing. I'd be ready to close this one out if it opens flat tomorrow. I'd be more apt to put a buy stop up here somewhere, telling me that they did get the J-hook pattern started. Okay, Priceline getting ready for earnings. Bank of California, little J-hook. You can be buying this one. Tesla's been getting whacked. It got practically down to the 50-day moving average. If you're short, you stay short. Your stochastics are still heading down. You had a bearish left-right combo gap down. That's your first target. I would still be putting my Fibonacci number on here, or Fibonacci retracement. Notice where it closed today, right smack dab on the 38% retracement. Almost touched the 50. But your stochastics are still heading down. If they open this positive tomorrow, and I was short, I'd probably cover the short positions with the anticipation they're going to bounce it back up over the next few days, back up to the T-line. If it opens lower, then you watch again to see if they actually touch the 50. Oh, let's see. Priceline. Did they announce earnings? Oh, is it way up here? Now that becomes a different story. That tells you you're definitely still in an uptrend. Nordstrom's, you can be buying this one. Not going to be very exciting, but it's heading in the right direction. ARR, REIT, you can stay long on this one. You can see how it's broken, the downtrending channel. Stay long as it stays above the T line, but I'd probably be anticipating that you'd be owning that because of the dividend yield. Realty Income Corp, just stay long. I wouldn't want to see it close again below the T line. And SGYP, nothing major yet until they break this little downtrending channel. So if you're buying this one tomorrow, it needs to get up through the 50. But you do have a strong Morningstar signal here. And ACAD, just stay long as it stays above the T line. This hurts. Nothing. And see where this is the exact reason why you want to know what to do. If you had the left-right combo, if you bought it on this day was a little bit scary because they opened it back below the 50. When they open it lower, you definitely should be out of it. So right now, I wouldn't be long, I wouldn't be short. You can see how there's a base in here. It really doesn't have any direction. Okay, one more. The Biotechs, just like Labu, telling you there's strength in that sector right now. Okay, with that, again, nothing has changed. The fact that we've had 12 days in a row to the upside, the Japanese rice traders usually use the number 8. But after that, your probabilities of reversal are extremely strong. But we could see what the magnitude of this move was down here. So right now, you might see some backing and filling, but as long as they don't close it below the T-line, that means your uptrend is still in progress. So stay predominantly long. Just make sure you've got your stops placed at logical spots that tell you if it came back through that level, you should be out of it. The Japanese rice traders traded rice well before there was any exchanges other than the rice exchange. So, and you also have to remember, the Japanese rice traders didn't become wealthy. They became legendarily wealthy, trading the most basic of all commodities in the world, which was rice. John, the chart service I use for illustrating these is, I forget. Oh, CQG. But it is kind of the feed for a lot of your chart services that are at individual brokerage firms. The only reason I use it is because it works very fast and effectively for giving demonstrations like this. And it's like $1,300 a month. Gabriel, you don't want to use this one. You can use, look at TC Net, Warden Brothers. Look at Metastock. They've all got good charting with scanning software. Let's see. Yeah, TC 2000 is like $95, $97 a month. Works very effectively. TOS. Yeah, TOS's charts I don't use because I got Metastock and TC Net. So I use those next to the trades that I actually have on. But then I'm usually looking at those same trades over here. That's a good combination, Metastock and TOS. All right, everybody. Thanks for showing up. We'll see you bright and early in the chat rooms tomorrow.